Hey, good morning, everybody. Today is Tuesday, March 29th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the 100 most powerful stocks in the most powerful industry groups, 10 came from the real estate investment trust industry. 6 came from packaged foods, 5 came from cement and aggregates, 5 came from information services, and rounding out the top 5, we have airlines, semiconductor devices, mass merchants, and home improvement, all with 4 stocks each in the 100 most powerful stocks in the most powerful industries. We've been seeing a lot of airlines recently. We've been seeing a lot of semiconductor devices. We've been seeing some cement and aggregates. And for a long time, we've been seeing an awful lot of real estate investment trusts. These might be good places to look for leadership in this market. Let's take a look at what the Russell 2000's up to. Russell continues to struggle with resistance right here in the 1079 area. Notice how we recaptured that area yesterday, but somewhat unconvincingly. This area, I think, is the key to the market going forward. The Russell 2000, as we've been noting for a long time, is the key to the market. If the Russell can take out that 1079 area, I think that we become a little bit more bullish. If we fail here and have to go back and retest support in the 1040 area, then we may get an opportunity to see some lower prices. Let's see what the Nasdaq Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market, and to my way of thinking is the most important element. So let's take a brief look at the market. Stocks closed mixed again yesterday. The Nasdaq closed lower while the S&P was up for the session. Trading volume was below average and lighter than the prior day. Our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Our universal watch list continues to be a concern with only 31 names. In a healthy market, we'll generally have between 50 and 90 names on the universal watch list. That noted, we remain cautiously bullish on the market. If the market remains healthy, the number of stocks in the universal watch list will continue to increase. Advancing issues edged decliners by a 4-3 margin yesterday. The New York Stock Exchange advanced decline line continues to look bullish. New highs edged new lows. That noted, however, both our new high, new low indicator and the McClellan oscillator have switched to sell signals on the market, albeit the McClellan has crept closer to buy territory yesterday. It should be noted that while often premature, the new high, new low indicator frequently is the first of our indicators to indicate a change in market direction. Our overbought, oversold indicator is indicating a neutral condition in the market. According to our Ramosi ratio, large capitalization stocks continued to better small yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. The market's more bullish than bearish, but our new high, new low indicator and the McClellan oscillator are indicating that the market may be stressed here and in need of a short-term correction. Traders may want to take advantage of any weakness that develops to add to or tweak their portfolios. That noted, be careful, and as always, keep your stops in place. Okay. Yesterday, the Nasdaq Composite was down 6.71 points, or 0.14%. We closed at 47.66, and note, we continue to struggle with this trend line resistance. As we've been noting recently, this trend line goes all the way back to the beginning of the bull market back in 2009. Trading volume yesterday was well below average and below the prior day. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February 18th. We have 3 distribution days on the Nasdaq in the past month. That's a reasonable distribution count. Yesterday we lost this day, which fell off of our count due to age. After a month, we no longer count distribution days. Right now, the Nasdaq is bracketed by support down here in the 45.06 area and resistance at this trend line. If we were to better that trend line, the next area of resistance is going to be the 200-day moving average, followed by significant resistance here in the 4900 area. Our market timing model is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Let's see what the S&P 500 is up to. The S&P was up 1.11 points yesterday, or 0.05%. We closed at 2037, and note we continued to struggle with resistance right here in the 2044 area. Trading volume yesterday was below average and below the prior day. The S&P 500 remains in a confirmed uptrend, and yesterday we lost this distribution day off of our count, giving us just 1 distribution day in the past month on the S&P 500. That's certainly very reasonable and reasonably bullish. Right now, the S&P is bracketed by support down here in the 1993 area and resistance, as noted before, in the 2044 range. Were we to better that range, the next significant area of resistance is up here in the 2116 area. Before we go, I want to talk about BroadSoft. BroadSoft provides software for fixed-line, mobile, and cable service providers for delivery of voice and multimedia services. The stock has been working on this rather oddly shaped cup with handle base with a pivot point in the 3911 area. This is a first stage base. BroadSoft gets a 64% checklist rating. We've seen a lot of accumulation in BroadSoft. Notice this towering volume that we've seen in BroadSoft recently. That volume is a bullish sign and worth making a note of. Yesterday, BroadSoft traded heavier trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot. Notice how the stock tested its 10-day moving average right here. We show it in pink, and closed above its 21-day exponential moving average, which we show in green. That type of activity allows us to get into the stock a little bit ahead of the pivot point. So if you're looking for some place to put some fairly safe money in a first stage base, BroadSoft might be worth taking a look at. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues, Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs Incorporated believes to be accurate. Ohannes & Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.